What's a sign someone is heading towards a financial trouble?
Just making minimum payments on your credit cards.
Today's guest took one of the most boring industries on the planet and made millions stop scrolling.
A lot of people think that once they earn a lot of money, their financial problems will disappear.
Most Australians are relying on misinformation and making their decisions.
She turned tax into content, numbers into stories, and expertise into influence.
We are recording this in mid-2026. What are Australians getting wrong about money right now?
The capitalist in me would be lying if I said that I was worried. I'm very much excited about what's coming because a lot of people are very fearful.
She proved that the right storyteller can make even taxes go viral.
He would have spent less than, I would say, $15,000, and then he made more than $300,000 in this one trip.
Millions watched, thousands learned, and an industry found a new voice.
If we're talking about quick money here, my favorite example to tell is
Meet Mansi Anand.
Mansi, a lot of people think that once they earn a lot of money, their financial problems will disappear. What's your perspective on that?
depends on what financial problems we're talking about. If your financial problems are basic needs, that is food, clothes, and shelter, yes, you would solve that by making a lot of money. If you have to start somewhere, you have to start making money. So if you start making money, you're someone who's stuck behind in like a third world without basic necessities. Yes, your only way out is making a lot of income. After a certain point, this loses that much value. So when you're starting, it does has a lot of value. But once you are in the game, once you've started making that money, there are a lot more things that start to matter.
Right. But then I've also seen like a lot of people who are high income earners, right? And yet a lot of them often are just living by their means, often because of their poor financial decisions. Have you seen anything you would like to say on that?
So what happens is you move to a safe neighborhood. You may move to a nice neighborhood thinking it is safe for your family. Then you switch your hatchback or your sedan car to a SUV or a ute thinking it is more safe for my children or my wife to be in this car. The next step you're putting your kids in private schools because you want to give them the best education. And then you would take them to 2 vacations in a year because you don't want them to be missing out, because everyone who goes to these schools literally goes on 2 international vacations every year. And then you would see branded clothes, private tuitions, tennis lessons, and it just
Keeps on increasing.
Yeah, you are
so
in a loop.
With the wealth, they also increase their cost of living.
Yes,
their
so
living
you are in a
expenses.
loop, and you don't specifically choose that. You just think this is necessary, and if I can do it, I should be doing it. So you just get into, without even knowing, you get into a loop, and that is what we call lifestyle creep.
Lifestyle creep.
Yeah,
correct.
that is where you get into a loop. You are upgrading your lifestyle and you're explaining to yourself, this was necessary for my safety. This was necessary for my children's growth. This is necessary to make sure my children like look up to me and don't feel like I'm a loser and I cannot take them anywhere. So yeah, that's those choices
Right.
add up.
Yeah. It's more like keeping up with the Kardashians kind of lifestyle, isn't it?
It is like keeping up the guy next door.
Yeah.
If you move to a nice neighborhood, you're looking at your neighbor's car in the morning and you're looking at your hatchback car and you like it's not looking
to
good it's not looking good in front of my house.
Yeah.
Let's move to a bigger SUV or something. And like sooner you're in a loop and then you just realize, oh, what happened?
Yeah. What has happened? Yeah. No, absolutely true. Now, this is definitely, about the people who are not financially savvy, but about people who are, really not only rich, but also financially savvy. When you look at the people who are financially successful, what have you seen which is common?
Most of them are playing the long-term game. I would say 99% of them are playing the long-term game. So earning a lot of money in a short span of time is possible and people are able to do it. But when you are in the business of wealth creation, when you are building a legacy that is left to generations, it is a long-term game. You would be working on your skills for a few years. then you would be actually making a lot of money. Then you would be learning how to store that money, how to put it away, how to use that money, and then you would be making good use of it. So this whole process, even the smallest time frame I say would be 8 to 10 years.
Right.
So that already makes it a long term game. So those who are financially successful, or the people we call financially successful, would be in it for the long term game. No one is just there for a short play.
Right. So long-term thinking is a very key aspect for becoming a financially successful person.
For wealth creation, yes, you have to be in the game long term to win it. Yes.
Right. Mansi, what's the biggest financial mistakes most Australians are making right now?
Most Australians are relying on misinformation and making their decisions. That is what I would say is the biggest mistake they're making. We listen to half a thing in a 1 minute video on Instagram or on TikTok. We believe on it, and the worst comes to it, we make our big decisions based on it. Listening to it and taking awareness from there is not a problem, but deciding based on that information is the biggest mistake that everyday Australian is making.
What, for an example?
A very good example would be, you just heard someone on the Instagram video saying that getting a trust can increase your borrowing capacity and you should be buying a property in trust, which might not be the case for your specific situation. The guy might be talking about someone who he or she has helped, or he or she might just have heard it from someone and is coming on Instagram and making that video. Financial advice, accounting advice, and anything related to your finance has to be customized to your situation to the T. It is not one glove that fits all hands, right? It is something you have to look in your situation. What are your plans? And then you have to customize it accordingly. Even everyday Australian, they would hear that you could, let's say, claim your pet expenses as a guard dog for your home office, which is a very stupid TikTok advice that should not be floating around. A guard dog has a specific definition, and then work from home expenses are separately claimed in separate provisions. There are separate sections that are actually making them legit. So it's just, you cannot hear something from TikTok or Instagram and go and lodge your tax return based on that. The people are saying that everyone can claim, the 5,000 kilometers without any proof in your tax returns. No, you need to substantiate that you have done that 5,000 kilometers. So all these small things, there would be like 4, 5, 6 kind of these advisors that are very popular on Instagram and very popular on TikTok. But in real life, in your own tax returns, if you are ever audited, they wouldn't hold up.
Wow.
So you have to stay away from that misinformation.
Right. So basically you're saying get advice from qualified licensed individuals rather than TikTok experts.
Yes.
Yeah.
And if you are not there yet, if you are at a very basic level, then do your proper research. Just don't rely on a 1 minute video that you saw on Instagram or TikTok. Just whatever you heard, do your own research. See what section you're applying behind this. See what case law is behind it, and then go and claim it. Or if you can't do that, there would be some professional that would be in your range, considering what you need to get done. Go and seek that advice.
So why do you think people make the same mistake?
Why do they keep relying on misinformation on Instagram and TikTok? Laziness. The only reason is our generation is getting so lazy. They just don't want to roll up their sleeves, get out and find the right person. They would rely on the first reel that pops up on their feed. They would rely on the first influencer that comes and says this is right. You just don't have to rely on them. You don't have to get your work done from the first person who you see on Instagram. There are a lot of very technical and very good professionals who you wouldn't find on social media, and they're doing very good job behind the scenes. They're just not seen. So you don't have to actually follow someone who's on social media and think that this person is good because they are making content as well.
Yes,
that person could be more driven and more motivated, because they're doing multiple things to bring business in for themselves. But for you personally, what is good is actually finding the right fit, the right professional who can cater to you.
Right. Makes sense. Makes sense. Mansi, you have worked with a lot of migrants, right? What's one common mistakes do you see that migrants make when they come in Australia?
This is my favorite one. Most of the migrants, when they come to Australia, they make only one goal of their life, and that is to get permanent residency. In the process, they stop upskilling themselves. They stop learning new skills. They stop focusing on their own betterment, and all they focus is on this one goal, that is permanent residency. And this is, I think, one of the biggest mistakes they make in their lives.
Right. So, any tax relevant mistakes do you see them making?
Going to the cheapest accountant possible, or trying to do everything themselves.
Right.
Yes, that is the one biggest mistake. They would just go to an accountant and ask them to do their tax return. If they're not happy with the refund, they would go to the second one. They'll shop around until they get the maximum refund back,
refund with cheapest fees.
with the cheapest fees.
Yeah.
And yeah, once they're happy there, they would just be, they would just go back there and not see what would happen if this is not the right thing that is happening for them.
Right.
So a lot of times I see people getting their tax returns done from not registered tax agents. So they would,
that also happens.
that happens. A lot of people who know how taxes work, they would just take their MyGov account and lodge it through that, because they are not tax agents and they don't know.
Wow.
So they would just take $50 or $60 in fees from them and then lodge it through their MyGov account. And the person who's paying that $50-$60 is happy because he got to get his tax return done in $50.
For a cheap price.
Yeah. But the person who's paying $50 doesn't realize that the service is paying for isn't even worth $50.
Yeah.
Because the professional is not licensed. He's just someone who is saying that I'm experienced in doing this.
Basically, an illegal, dodgy person. Yeah. Yeah. Mansi, what's a sign someone is heading towards a financial trouble?
Credit card cycle, debt cycling. You are always making minimum payments on your credit cards. You are always using buy now, pay later when you're out shopping. And then when it comes time, the end of month, to pay back your credit card, you realize you don't have that balance. You've just shopped way above your budget, or way above what you make or what you could have saved for these kind of purchases. And now you're stuck in a loop of this debt, which you have to just make minimum repayments for until, there's a hard reset that you're ready to make.
So, do most people recognize these mistakes or troubles?
Not initially. Once you get a credit card, you're just paying through it. You get a buy now, pay later limit, and then you are paying from it. You just keep on doing that until a year later or a year and a half later, you realize you have only made minimum payments on your credit card or or buy now, pay later for like a year or a year and a half. And until then, it's already very late when you realize this. So people do realize, yes, but it is so late by the time they realize that it has just become a second nature to them. It has just become a behavior thing to them. So even if they have increased their income and now they have money in their savings to make that purchase, they would automatically pay through your credit card because that thing has become second nature to them. So yes, I would say people realize in back of the mind, but they are very hesitant to actually acknowledge that this is the problem and then act on it.
Right. And what's usually the first thing that goes wrong in this?
Just making minimum payments on your credit cards. So the very first thing that you're doing wrong is using your credit card, and then when the time comes to pay, you're just making the minimum payment. That's the very first step that you're taking wrong. If you have decided to use a credit card, and that too for the purchases, this is not we're leveraging debt. I'm not talking about leveraging debt. This is something you're using your credit card, you're using your buy now, pay later limits to make purchases, which if you would have, just controlled yourself, or which if you would have just convinced yourself to live below your means, you could have already avoided. So even if you are using a credit card, you get 55 days to make that payment in full. So if you've made a purchase today of $200, you have 55 days to pay that off. even if you didn't have the money when you made the purchase. But you choose not to pay that in that 55 days as well. And then you choose to make a $50 or $60 minimum repayment on that $200 purchase. You don't realize these credit cards, these things are actually made by very smart bankers, very smart institutions who know that how human psychology works, and 90% of the time you're not going to win against them. People think that I'm accumulating points by paying on my Qantas card. I am accumulating points. They're betting on it. They're betting on you using these credit cards and then getting into a habit of it, because that's how human mind works. So the best way to beat them at this game is not participating in it.
In it.
Yeah. Or if you are like the top 10% who can keep that financial discipline and then put that money back, then it might work for you. But that's not 90% of the people.
So essentially, paying off your credit card bill before the interest rate kicks in.
Yes,
Interest
you should do that. You should do that, especially if you're using your credit card for your purchases or your leisure thing, or your just to splurge, especially if you're using for that.
Yeah. Now, very hot one. What's the biggest tax myths that most Australians believe?
I've had so many people come to me and say that I'm not gonna make more than 190,000 because then I would be taxed 47%. Or I'm not gonna make more than 130,000 because then suddenly I'm gonna be taxed 37%. So that is true that anything you earn above 190,000 would be taxed at 47%. But that doesn't mean all your income before that is getting taxed at 47% as well. Australia works on a progressive tax system. As your income increases, the tax on that increases as well. So anything you make between 45,000 to 130,000, you still would be paying a 30% tax on it. And then when you get above the 190,000, then you would be paying the 47% tax on it. So it's 2% medical levy, 47% tax. So that's when you would be paying 47% tax, and that's only on the income you're making above 190,000. Until 190,000, you're just paying progressively. So until 45,000, you're paying 16 cents, which is changing, I think, to 15 cents now. And then above 45,000, you would be paying around 37 cents on a dollar. And then above 190, you would be paying this tax. Above 190, you would be paying this 47% tax.
That's very interesting. Yeah, initially I used to also think the same, that in Australia the tax system is more like a flat rate, that if you earn at a certain income, then it would be immediately taxed at that percentage. But then I realized that it's more like a progressive way.
Yes. So even if you decide on making, like, say, 2 grand, 5 grand, or 10 grand more than 190,000, it's only on that 10 grand you're paying 47% tax. Everything below that, you're actually on the progressive system.
Yeah.
So a lot of people don't realize this. And still there are like people who've been doing their taxes from, I would say, 5-10 years, and they're still in this belief that they don't want to earn more, because then suddenly they would be paying half of their income to the government. It doesn't work like that.
And where do you think that this myth comes from?
Financial illiteracy. They don't teach this in our schools. We're not taught in this school that we are in a progressive tax system, or how to do your taxes, or how to calculate how much taxes it's going to be on your income. They don't teach this in schools. And then by the time someone's 18 and working, their go-to person is their mom and dad, who might not have made that many financial savvy decisions in their own lifetime. So the person they're going to for the financial literacy might be their grandmother or grandfather, who have already lived their lives and are not up to date with what's going in current scenario. And then their mom and dad, who might not have themselves led a very financially savvy life. And it's very intimidating for a 16-year-old or a 18-year-old who has just started working to go to a professional and understand all of this. This 16-year-old just wants to go to their job, get this done, and wants to leave the taxes to be sorted out by their mom and dad, as it rightly should be.
Yeah.
So, it's just the financial illiteracy. That's the reason.
Right. Now, what's something people think that they can claim, but they actually cannot?
A lot of such expenses, like we talked, people have this notion, I don't know, this was going on TikTok sometime back, that you could claim your pet expenses, saying that this is a guard dog for your home office. Another very creative deduction that would come is people would be claiming their mortgage interest in their work from home deductions. That is something you cannot do unless and until you can show that the home occupancy expenses, like the interest, are claimable, which usually would be the case if you don't have an office in the city you are living in. There would be some other conditions you would need to actually fulfill that you can claim your home occupancy expenses like your rent or interest on mortgage. But in most of the cases, you cannot do that. But a lot of people don't realize that, and they're like, yes, I can claim home office expense and as much as I want, and I have a separate home office in my home which I work from 3 days in a week, so I should be able to claim my interest portion of mortgage of that proportion of that room. It doesn't work like that.
Right. So does ATO actually checks all this?
It can. So I cannot say here that everything you do will get caught, because a lot of times people get away with that too. But you have to understand that even if you get away with it this financial year, next financial year, for next 5 years, if ATO can prove that you have defrauded them or what you have done is wrong, they can go back any number of years and open your tax return and charge you for it. And then they would be charging you penalties and levies for all this time too. When for like if you did that 5 years ago, they would, and you owe them certain amount of money back, they could charge you interest on that too. So it's any time you can get caught. It's not that if you've done the tax return, you've lodged it, and now 2 years have passed, or now the 5 year period has passed, so ATO cannot come back to you. As long as they can prove that there's something that you have done wrong, then they can come back and then they can ask you to pay back.
Have you actually seen any people getting caught?
Yeah. A lot of times. A lot of people get audited after tax time. There are a lot of audits happening not in my firm, in every accounting firm. A lot of audits are coming, especially now. There's this director penalty notices that are floating around. ATO is handing them down like candies. All these directors who were just doing anything they want in their companies, especially around the COVID time when the legislation was easy and government was also helping people to rise above and then get the economy going. There were a lot of things happening, but now those debts, the economy has completely shifted, so those debts are adding up. So the directors of these companies are now getting penalty notices for not actually adhering to their duties, right? For not actually doing what is right in the interest of their companies. And now they're going from one lawyer to another, or from one accountant to another, someone who would pick their file and actually correct those mistakes back. But yeah, there are people who wouldn't now touch it with a 10-foot pole. So yeah, this you would see it. I believe what goes around comes around, right?
Karma.
So it's karma, yeah. So even if you get away with it in some form, shape, or life, it would come back to you. So I would say, and especially if you have even not benefited from that much. So if you are on a, let's say, 30% tax bracket, you're claiming $100 extra in deductions, you're hardly getting $30 back out of it. And this is not something you wanted to do intentionally. You didn't want to defraud the system intentionally. Yeah. You just did it because, you heard it on Instagram, or you got in hands of a wrong advisor and you ended up doing it. So this is something you can avoid and you should avoid, because they can come after you anytime. So like suddenly you are a big shot, you made it big in life, and now they come back for what you did 5 years ago unintentionally, just to get back at you. Why would you want to put yourself in that position?
So how long back do they check your history of tax?
See, they can go back any number of years as long as they can prove that you have done a wrong thing. So there's a common myth that after 5 years they can't do it. Once 5 years time has passed, or some say like the 7-year time, definitely they're not coming back. Yes, that 5 years window is given by tax office that after 5 years they're not going to check your taxes. But then if they can prove that there is something that went wrong in this very financial year, then that 5 years hold no accountability. They can go back those 10 years and then just pick that one tax return and come after you. Why did you claim these extra rental deductions here? Why did you bid this? Just for some amount of money they could do that to you.
Oh, that's very interesting. Mansi, what's a tax mistake that starts small but can become very expensive in the long run?
Not planning right, or not planning at all. A lot of people just start and then they don't have a plan in mind as to what structure they are going to choose or what way they are going to go. So not having that plan, not having that structure can be very expensive in long run.
Right. Can you elaborate more on this?
So let's say if you want to start a side hustle or if you want to start a small business, you've just heard someone that make a company and start doing in it, right? You would spend your $800-900 at least. That's the minimum amount of money you would be spending on forming a company and then start doing your taxes on it. You could not realize that what you would be making is just 10 grand extra a year that you could have easily put on your own individual ABN and then paid less tax on it, because company is anyway charged on 25% tax from the very first dollar. But if you're someone who's earning 60,000 from or 70 or $80,000 from your job, and then you make additional 10 or let's say even $20,000 on your side hustle, you're better off lodging your tax returns under your individual ABN rather than spending all that money and forming a separate company and doing that. So even if you're making like up till 100,000 or 110,000, you're paying less tax as an individual, and this would be your effective flat rate, because again we are on a progressive tax system. You're not taxed as an individual on first 18,000. So if you take the average tax, it would still be less than that 25% that you would be paying from the very first dollar in the company. So even if you go to a wrong advisor, a lot of them would recommend you getting a company because of course they want to make their fees, and they would just be doing that to creating their own billables. They would just give you your company, your trust, and just start working on it. But a lot of times you're better off working on your sole trader ABN for a first couple of years, especially if you're not expecting that much income. Or the vice versa of that is true as well. A lot of people would just, research online and see that I could just use my personal ABN and I don't need to go into so many setup costs. But then in the very first year, they're making like $300,000 or $400,000 and they don't have a company structure or, a trust structure at place, and they would just be paying a lot of tax as an individual then. So it's just not planning right, not structuring from the beginning. That might not seem like a big deal when you're starting out because you're already very overwhelmed. There are hundreds of things you're already dealing with. So this is one thing you put at the back end that this I'll come back to when the tax season comes. By the time the tax season comes, you've already made that income. It's already too late to set up a structure and move your income. It doesn't work like that. So when you're starting, just have a good plan.
Wow, I actually didn't know this, and I think this is a very good advice, and I'm pretty sure a lot of people can relate to this one, because I'm pretty sure like anyone who is starting out probably may think that they have to start with creating a company and all that if they are just doing some sort of side hustle that where they are not even earning a lot of money yet.
Another thing I would like to add, a lot of people just go for the company just to get a separate business name. They say that I want to, have my business should look professional when I'm creating invoices. So that's why I can't do it on my name. You can just there's a provision, you can just get a business name under your own ABN. So let's say I, as a Mansi, wants to start a home furnishing business and I want to name it like, let's say, home furnishings or something, right? If I want to. So I can go and check if home furnishings name is available, and then I can get it under my own ABN, and it just costs like $40 or $44 for 1 year from the ASIC to get it. And then if you're getting through accountant, of course, their fees. But yeah, it's minimal cost, less than like $100, $150. You can get the name for 3 years as well. and then you can use that business name and start making invoices with your ABN and that business name, so that you can look professional as well that you want, and then skip those setup costs too.
Right.
Yeah.
But how does one ensure that it's not copyright protected? What if?
So there are government websites that you can go on and check. Government website one you can go on and check is ASIC Connect, ASIC Connect. You go on ASIC Connect and you search business name index or business name register. Put the name that you want to look for or the name you want for your business, and then see if that is available. If you search it, it would show you the availability of that name. If the name you have decided is available, you can go and apply on ASIC Connect yourself, or you could get an accountant to do it for you.
Right. Okay. That's very useful to know. Mansi, we are recording this in mid 2026. What are Australians getting wrong about money right now?
A lot of things. We are in a period where our tax system is rapidly changing. We have had so many updates that have been introduced in this May 12 budget that came out. And then there are so many provisions that are getting legislated as we speak. And there are a lot of backflips, or I would say going back and forth happening within the government itself as well. So today, if there's something that has been announced, tomorrow that could just get off. They would just backflip on that, or they would change a few details. So from the time of announcement and till the legislation is not made, this is the time of uncertainty. There would be 100 things that government would be throwing out just to check the sentiment in the audience. And then there would be a lot of backlash from the people as well. Why are they doing this? Why are they not doing this? So this is the period of uncertainty. And this is where a lot of misinformation floats around, because literally the right information will only come out once the legislation is there. So it's very dynamic. It's changing daily. And it is something Australians are finding it very hard to keep up with.
Is there a trend worrying you right now?
Worrying?
Any trend that's going on regarding these changes?
The capitalist in me would be lying if I said that I was worried. Because actually, I'm very much excited about what's coming, because a lot of people are very fearful. And they're not, realizing that they could work around this. If their goal is just wealth creation, they could actually come out of the other end stronger. So I am excited for myself. I am excited for my clients, because we are ready to roll up our sleeves and work around whatever is happening. Yes, there would be a lot of avenues that would be closed for us, but then there would be a lot of new ones that we would be forming. So
really, so I'm curious. Like you said that there's more opportunity coming up for people to create wealth. Like what are these? Can you share it with us?
So I'll just give you a quick example. Like recently, government has banned limited recourse borrowing. So there was a provision that allowed people to actually borrow in their self-managed super fund to get an investment property, a residential investment property.
Right.
So you're living in this house, you want to buy an investment property, let's say in a regional Victoria, regional New South Wales, and you have some money in your super fund. Your super fund is currently invested in shares or with your institutional investments like managed funds and a lot of other things that they would have invested in, right?
Yeah.
You could just take all that out, manage it yourself, buy a residential property, and get a loan to buy a residential property. So let's say you had 100,000 or 200,000 in your super fund. You could have paid that as a deposit, 20% deposit, and then got a property for like 500,000 or 600,000 in your super fund. Now government is banning that. You cannot borrow with your super fund to get a residential investment property.
Right. Yeah.
So then now there are a lot of other options open. We have avenue for commercial property. We have avenue for farmland. And there would be a lot of people who would not have access to the lending structures or to the network around them where they can pool up resources and actually go get into commercial or actually go get into farmland, or even they would not have the knowledge to do so. So that is where a professional comes in, and that is where having a network that uplifts each other would come in, because then there is an opportunity where a few number of trusts or a few number of self-managed super funds could come together and buy a commercial property.
Right.
So it's just all depends on your networks and the kind of advisors that you have advising you. And by the way, I'm not a financial advisor, so I am not licensed to give the advice on where you should be putting your self-managed super fund money in. That is only what a financial planner can do, not a buyer's agent, not an accountant, not a lawyer. Only a financial planner can give you that advice, and most Australians just skip that part. They just don't go there.
Wow, very interesting fact. Because I actually myself was very much exploring commercial property, but I actually never thought about farmland as well. I think that also could be a very good avenue for investment, considering with the changes that have affected the residential market. I think, definitely that's something I would also be curious to look into.
Yeah. What holds back most people is the amount of money they have in their self-managed super fund. Buying a farmland or a commercial property would just need higher deposit because they're inherently expensive. You would not get a farmland. You can, but not a good farmland in that 500,000 budget, or a good commercial property in that 500,000 budget. So that's where your research comes in. That is where your networks come in. That is where pooling of your resources can help you.
Can you give some ideas that how can someone like me, or like someone who is aspiring to buy commercial property, or maybe look into farmland, like how can we increase our network?
Getting on the ground, honestly. We are a generation who's just sitting on the Instagram and trying to find people who are actually doing it. I would say just go get on the ground. There are a lot. If you want to, just buy, let's say, farmland in a regional area like Shepparton, there would be a lot of community events that would be happening in that area. I would say just walk into a few, make some connections, make some networks, talk to people. What can be grown in this area? How is it working? How are leases working in this area? Where can the farmland be leased and how much you can get for it? And then get a good financial planner to work numbers for you, that how much money you can make off it, how much return you can get off it. Then see per your financial situation if that is viable option for you or not. So do this bit of homework for you by yourself, and then take professional help when it comes to actually getting
Investing.
investing or getting those numbers checked, getting that you're in the right direction. Just go to a professional.
Right. Regarding ATO, I'm always like curious, like to what extent does ATO actually knows about us, like money wise? Is that only what we lodge in the tax, or they have more visibility, like the big brother, into all of our financial activities?
They have the big visibility, especially with the AI systems getting stronger and stronger every day. Their systems are getting sophisticated as well. So they have data matching tools. They have reporting that comes. They even have, if they want, they can even have reporting from your bank accounts to check. So there's nothing that they have access to your immigration records. They have access to all these things. So this is not 10 years ago where nothing comes out, like they can't know, right? Now, even a lot of employers who are paying you on ABN have the responsibility to report to ATO what they've paid you, even on your ABN. And that's going to tax
Don't
office, right?
employers pay on TFN though?
Yeah, they pay on TFN, and there are some employers who can pay you on ABN too.
Right.
That is in cleaning businesses, in trucking industry, and businesses like this where contractor economy, like security businesses, contractor economy is very high. They pay you on your ABN, but then you're just working like an employee, but you're getting paid on ABN.
Oh wow.
So they get that information. A lot of people, or especially international students, I realize they're working on security in security industry. They're working in trucking, and they say that just because they're getting paid on ABN, they don't need to report this income. They're doing cleaning on ABN, they don't need to report this income because ATO doesn't know about it. It's not the case. It is
Right.
the onus is on your boss to report it, and to claim their own deduction. They would report it, and ATO would know whether they come after you or not. That's a
different
separate thing, but they actually have that information sitting right there.
Oh wow. Like even like stuff like crypto, shares, side hustles.
Yeah, side gigs. The side gig economy is on ATO's radar since like 2 years now. So Uber reports directly to ATO. Didi reports directly to ATO. Airbnb reports directly to ATO. So all this side gig economy is actually making reporting to the taxation office, and they have these numbers that how much your Airbnb made, how much you made on your Uber. They are also coming on your pre-filling report, so accountants can see that too, that how much Uber you've driven or how much Didi you've done. So even for the side hustles, they are targeting that slowly but steadily. They're targeting that.
Oh, very interesting. What is your take on a lot of people nowadays using AI tools for tax advice?
For tax advice, it's okay. I mean, for awareness, I would say it's okay. If you are not sure about something, you went to AI, asked a question, and you got an answer, it's still fine. But if you rely on that advice to make a decision, that is something I would totally advise against. I would say, yes, you go to ChatGPT or go to Claude, ask that question, and then check the sources. So your Gemini, your Claude would give you sources, links from where they're getting that information and giving that to you. So just follow those links, go on those links, check what information they're giving you, check if that is correct or not, read about it yourself, and then get it verified from a tax professional or from someone who is the expert of that area before making a decision.
Have you seen any mistakes caused by AI tools when giving such advice?
Daily. But AI is making mistakes in basic calculations. People would just go there and ask them to calculate my HECS debt or my HECS debt repayment. They wouldn't just call their accountant. They would ask them how much the repayment would be, and then they would plan accordingly. And when the accountant hands them a number, and they would be like surprised, where is this coming from? ChatGPT said my HECS repayment per my income would just be this amount. Why is it this much? So there's a lot of misinformation and a lot of bad advice that is floating around from these tools. It's very necessary that you actually confirm it from a tax professional.
Makes sense.
In today's scenario, I'm not sure how we end up in future, but in today's scenario, as of today, you definitely need a tax professional.
Right. So what kind of, I guess, risks do you see as an accountant as a career because of AI influence now?
In my career?
Or like just in accountancy, like AI has probably taken over so many, options, like career options nowadays, like creative field, writers, technical writers, engineers, so on, developers. How is accountancy impacted because of AI?
I don't think writers have been replaced by AI. Right, the job of writers have actually just upgraded. They get a writing from AI. They would have to proofread and see what is going and just, write a lot of sections again and then submit it. So it's not that AI is able to provide you a final draft. Similarly, in accounting industry, there are areas that have been taken up by AI, your bookkeeping or things like that. But when it comes to the advisory part, and also when it comes to the personal touch, clients would still not be satisfied by talking to an AI for their advice. They would still need that human intervention and that human satisfaction that yes, you're safe, or that yes, what we're doing is legal. A person they can go to time and time again before making a decision. So that's still a key thing. And the accountant's job, I think, is just evolving like any other field of work we are in. Our jobs are just rapidly evolving. We just need to, get ourselves up to date with technology and just outsource our, the lethargiest parts to AI And actually, there's a lot of opportunity to do good work now. There's a lot of opportunity to make the thing, to be able to do the things that you actually want to do. Talking to people, making decisions, and actively involved with a client, because now you don't have to sit behind a desk for that many number of hours just doing the crunching. AI is helping you with that. But yes, it opens a lot of opportunities for you to go out more, to talk to people more, to actually do visits more to your clients.
Now, this is more about like students, as a student, because there's so many international students in Australia studying accounting. How is the impact of AI, and like what can they do to make sure that they are not impacted by AI and continue be successful in the accounting space?
I would say develop your communication skills and work hard on your soft skills. See, technical things, yes, you need to know, need to have a very strong technical base. But a lot of that is readily available now at a click of a button. So you don't have to be someone who's, cramming a lot of information. That is readily available to you. But you have to be someone who has to know how to communicate that well, how to, form your words in a way that you can make a layman understand the terms and things better. So that is a continuous evolvement process. Work on your communication skills, work on your networking skills, and just get out and network a lot.
Mansi, do you think Australians are becoming more financial literate or getting more confused?
Right now, I think the confusion is more. Literacy is taking a backseat. There's a lot of awareness because of social media, but there's a lot of confusion as well, especially because the tax system is so rapidly changing. It is really hard to keep up with the changes that are being announced daily. And also, it's all getting more complicated. The simpler structure, like the calculation of capital gains we had, it's just or the provisions that we had, the old ones that we have been using for years now, are getting replaced with these new measures or something that is coming back from 90s that people haven't seen the people of this generation haven't seen. So it's a lot of confusion on a daily basis. I literally spend at least 3 to 4 hours of my day on calls explaining to people what's been happening in the current scenario, because people are anxious. People are anxious about their investments. People are anxious about the rules that are coming, and people are confused. They want that hand holding. They want someone in their court to say that, yes, it's all going to be fine and we are going to be on the other hand stronger.
Right.
So
Right.
yeah, it's a lot of confusion I'm seeing.
But what do you think is driving this?
It's the rapidly changing environment.
Yeah.
So it is the rapidly changing tax environment. It is the rapidly changing tax laws. It is the introduction of the new bills. It is the introduction of these new measures, and also a lot of awareness that is coming from the social media. So people usually don't listen to a press conference, or people don't just look for the legislation papers when they're out, but they would definitely be scrolling on Instagram, and an accountant would come on your feed and tell that, oh, this baffling thing has happened today, or this this mind-boggling thing has happened today, which I've
Right.
done too. And
Yeah.
then people would just be surprised, oh, what happened? And next
Yeah.
morning, even I'm getting calls, what happened? What has changed? How is it affecting us? So the awareness people are getting from social media, and then they're not getting complete answers there, because how much they can get from a 1-minute video, right?
Right.
So that's causing the confusion, and that's causing the anxiousness.
Ah, interesting. And what do you, I mean, you said that to avoid this, people need to, consult someone like you, like a licensed, qualified person, accountant, to, not make any wrong decisions.
Yeah.
So, yeah. Mansi, what's something that you have learned from your wealthy clients that has surprised you?
I used to have this belief before being an accountant, as every young person has, that rich people just splurge. They just go out and they can spend on anything and everything they want. They have a car that has no limit, and they could just tap it like candies and go around and have those bags. It doesn't work like that. It doesn't work like that. We say that poor people make the budget. Rich people definitely have a budget. if budget word has a negative notion to it, you can call it a plan. But rich people have a job for every dollar they make. They put each bit of money to use, every bit they're making, especially the one that is made by their personal efforts. Their hard earned money, it definitely has a job. And then whatever passive income they're making, they can think of splurging from there. But they are very thoughtful in what kind of purchases they're making. So when you're wealthy, it doesn't come with a liberty to just go out and be financially irresponsible, because you get there by being financially responsible. So you do have a pool that is going to savings, you have a pool that is going for your emergency fund, you have a pool that is going for your investments, then you have a pool that is going back into your business. So you have all these things, a safety net in everything. That is how wealthy operate, and they certainly do have a budget. Even if you don't want to call that, you can call it a plan. But yeah, they definitely have a plan with all their money.
And did you expect this, or were you surprised by this?
Initially, when I saw people thinking through so much before making an investment, or even when it is not a big chunk of their money, just them actually being very careful and cautious about the decision they're making, initially it surprised me. I was like, you have $1 million in account. Even if you spend 50,000 here and it doesn't turn out to be a good investment, it's just this fine, right? It's gonna be okay.
Yeah.
A very rookie mindset was that. But as I've grown, I've realized that no, that 50,000 is very important sum out of that $1 million, and
Cool.
it has to be spent very wisely. So you have to be risk averse, and you have to be cautious, and you have to keep in mind what bad can happen with it. Once you are in that, then you don't worry about it, because you've already thought through what all could have gone wrong. So you're fine, you cut your losses fast and you grow from there. But once you are getting into it, you're very cautious, you take those decisions with full knowledge, and by actually taking a calculated risk, not just diving into it just because everyone else is doing.
I mean, no doubt that they are so rich because they are so smart as well with their
Yes, they're
money
very,
habits.
they have a very good plan for every dollar they make. They have a very good plan for every dollar that's coming out of their investment. And a lot of times I see they have, even if the cash hasn't hit their bank account, even if they've anticipated this money is going to come their way, they already have a plan for it. They already have a job for it. They already have a next investment lined up.
Wow.
So they would be saying, in a couple of months' time, this money is coming into my account. I would not leave it idle sitting in my account for those 2 months and then think of planning and then get a good opportunity my way. They're already out hunting for opportunities that when this money is coming into my account, it should straight away go to the next one.
Can you give an example that has come commonly across in your experience?
Australia is a very, let's say, property-driven country. So
Yeah.
if I say, even before someone has sold one of their assets, sold one of their properties, they would know that what is the next thing they want to get into. They would already have it in the plan that the settlement is a couple of months away. I know now I have to move to a bigger thing from here, a bigger commercial property or a bigger piece of land or a bigger building that I want to start building. I work with a lot of people in the construction industry as well who are builders, and they know they have to start their next project. A good example is builders. They know that one of their projects is already, is already in a good, timeline. It's going to get sold out, or it's going to get pre-sold out, or you're gonna have, you're gonna sell it off the plan. You have that in your mind, and then you also have in your mind that what's the next project that is coming up. How can it be bigger and better than the one you've already done, and how you can effectively use the money that's coming in, how you can fast track your timeline of the money coming in from here and then getting out to the bigger and the better project, so that they just are very quick in moving their money.
Wow. I have another question. Because you see so many clients of varying income levels, so many businesses, right? What is the pattern you have seen? Is there any certain business client you have where you have seen, they've made fair good of amount of money from a like small investment, something like anyone probably with a little bit of time and effort, and let's say investment of 10 30 $10,000 $30,000 can get into.
If we're talking about quick money here, my favorite example to tell is one of the clients I came across when I was in job. The client went on a biking trip across Australia. So he was going from Victoria to Perth, and he was on his bike, and he was a handyman, tradies man. He would tradie person, right? He would just get on his bike and then go to the regional areas. He would look around like this bus stop is broken. This road just needs a bit of work here. These councils, the regional councils, would have the money to throw, but they wouldn't have any people to do it. So he would just walk into the council. He would ask them. He would give them a quick quote. He can fix this, and he has the tools. And like if you give him the contract, he could do it in next couple of days.
Wow.
And these were very small regional towns in Western Australia. These were very small regional towns on the way from here, Victoria, to Perth, right? And the councils literally had money to splurge there. So in this trip, he would have spent less than, I would say, $15,000, and then he made more than $300,000.
Wow.
In this one trip, and all the expense was kind of claimable because
It's a business travel.
he was actually working throughout his trip.
That's amazing.
So,
But I can also imagine that how that can be not possible for everyday people. Like, let's say if I'm in Sydney or Melbourne, it may not be possible. And what else? Like, what else have you seen where you have seen like, oh, this doesn't take too much of qualification or education, or it just needs pure hard work and a little bit of investment. Like, for example, like I've seen examples like a lot of truck drivers make really good money. Probably there are a few other such occupations where they make good money, and you're surprised to see their bank statements.
Deven, if I'm honest, nothing surprises me at this point. I am not surprised by seeing any professional making a lot of money, because by now, talking to a lot of people, I have understood everything is hard. There's no quick money. There's no easy money. There's no like the opportunity is just sitting there and people are not doing it. If
Right.
it was so easy, if it is too good to be true, it is actually too good to be true. The people who are in it are actually going through different challenges in it and are actually making those processes streamlined, and that's how they're getting there. So a lot of times people say service businesses are very good, right? The ones you mentioned, truck driving and all, these are very manual labor businesses. Of course, these are hard. If you have to drive an interstate truck, you would be like driving for so many days. You would be away from your home, and then yes, you would make good money, but it is literally hard.
It is hard.
It is taking
absolutely.
toll on your health. Right? And if I go on the other side, let's go on in a service business, let's say an accounting business, you would say it's good margins. There's nothing, there's no investment needed in this. I literally started from zero and I am making good money in my business. You could say service business is easy in a sense, right? Because you're not making investments and you're just churning from zero to making a good thing. But that daily churn, that daily refining of processes, that daily work, it is hard. Everything is hard. So I cannot say that this is easy or this is easy. Everything is hard. You just have to choose your hard. You just have to decide that I want to go with this hard, and that's the way you work on. Or a lot of times I think people start in delusion, which works very well as well. People think this would be easy. If I go in this industry, I would just crack it and it seems easy. I already do it. One good opportunity that just floats around is home care business here in Australia, right?
What is that?
So there are a lot of nurses who would just go to people's house and then care for them there, because there's so much toll on our public system. A lot of times public hospitals send people home to recover. Even in the aged
care.
Even in the, I would say, aged section of the population, now people want to stay at their home more than aged care. This has been a trend that has been changing since COVID. People just want to stay at their home. So these people do need care right at home. They're not living with their kids. They want someone to come and mow their gardens. They want someone to come make their meals. So, and government is giving subsidies for them. They get pensions for that. So it's a very good business. And people started thinking that it would be easy to get participants, in that area, or it's not the case. You like getting each and every participant is a kind of work. Is so it all comes down to your skills then. How good you are at networking, how good you are at marketing, how good you are at selling. So when a combination of these skills come together, so you've started first year, nothing happens, second year something happens, third year you boom. It is the work of those first 2 years where you have learned those skills, built yourself, and then the third year people see you booming. It's the work of those 2-3 years that you've spent behind, that you've spent either refining your content, that you've spent either learning marketing, or you've spent either working on your sales skill. Even if people don't realize, they just start in delusion thinking that if I keep doing it, it would happen. And on the way, they learn a lot of things. And then they look back, some people say, oh, I got lucky. No, they didn't get lucky. They spent 2 years doing the same thing, increasing the surface area of their luck, getting out there, being in the game, and then, yes, attracting the right kind of opportunities to them.
Yeah, makes sense. What's one lesson that everyone should learn before turning 25?
I think basic financial literacy, everyone should learn before 25.
But still, any like one particular lesson?
Managing money, how you should be managing your money, what is something that can actually be a financially irresponsible decision, or what is something that can be a financially informed decision, what are assets, what are liabilities, what is income, what is expense. And then also I would suggest everyone should know how to read a basic set of financial statements. An 18-year-old, a 20-year-old, definitely, even if they're not going to get into a business ever, even if they're not going to ever invest in stock market, they should still know how to learn or how to read a small set of financial statements, so that they can, understand what's happening in the economy. Because it's all around us when we are, living. You cannot spend 60-70 years of your life without even knowing the basics of money, when it is very key thing to your survival, right? We cannot say money is not important, right? It's a very key thing to your survival.
Absolutely.
So you have to know about it.
Yeah. And as an accountant, how has your relationship changed with money?
Again, I have realized as an accountant how good assets can change your life, and how your bad expenses or bad money decisions can convert into liabilities quickly, that can keep coming back to you, keep coming back to bite you
Right.
for a long term. So how every dollar you spend can actually be converted into an expense, or it can actually be seen as a liability if the things go wrong, or if things go right, how a decision could actually make a whirlwind from there, and build a system around you and build a legacy around you. So each and every decision counts.
Right. Makes sense. Now, this question always popped in my head, especially when, I was at a stage when I was like kind of new to Australia. And I was wondering, like, at what point does it make sense to engage an accountant?
If you ask me, I'll be biased and say at every step, just get a professional and like keep out the budget for it. Especially, I know people are saying they don't make that much money. They have student loans or student fees to pay. They cannot go out or spend $120 or $130 even on an accountant. I understand that. A lot of accountants do, student discounts. We do that as well. You can go there, and also whatever you spend on them is actually tax deductible. So if you're paying $100 to your accountant, it would give you 30 cents on a dollar back at least if you are on that 30% tax bracket, because it is claimable. But still, if you have to ask me for a number, I would say if you're making more than 100,000, I think it's very much advisable get a tax professional. A lot of people I say are making just TFN income of 100,000, 120,000, and they think it's easy. They can just go on MyGov and lodge their taxes. But there are a lot of things that an accountant could have told you to plan better for next financial year. There are a lot of schemes that you could have come across, like you've said migrants, like, right, they want to save money, so they don't want to go to accountant. But then there are schemes like first home super saver scheme. Everyone is saving for their superannuation, for their first home, right? And if they put that money in their superannuation, they could withdraw that when they have to get their first home. Yes, a certain amount of tax, that is 15% tax, would be withheld out of it when you take it out from the self-managed super fund. But you would have good amount of savings in the year that you have deposited it in, because it would give you more cash flow initially in terms of your tax refund, as you can claim that as a deduction in that very tax year, and you can defer tax with that. So like when you do your numbers, it actually turns out better, because a lot of migrants are waiting for permanent residency, and until the time they're waiting for the permanent residency, they just keep their savings in the account, in a bank account, to save for a deposit for a home, right? It's better they can use the first home super saver scheme, put the money there, you can still get some interest on that money, and then you pay 15% tax inside the superannuation fund, and then you can get the money out. And also you wouldn't spend the money because it's not in your bank account, it is in your self-managed super fund, and you can only take it out for your first home. So you've kind of put it away as well. So there are other schemes as well like this, an accountant could tell you. So definitely I would suggest everyone go for it. But if you're like really on a crunch and can't go, then anyone who is making more than $100,000, definitely keep a budget for it.
And what situations can be complicated to do it DIY?
A lot of times, even doing with basic ABN income gets complicated if you do it yourself. If you do it from your MyGov account, a lot of times people get confused in which label they are going to report their business income. Even if they have bought a car or a vehicle for their business, and that's just they're working on ABN, they're not working on TFN, they're working on ABN and have bought a vehicle. A lot of times people miscalculate their depreciation. They just don't know the rates, or they just don't know the effective life of their vehicle, and they don't get the depreciation right. They don't get the deductions for their business right. So even a basic business tax return and ABN tax return gets complicated.
Wow. Mansi, what's the biggest misunderstanding people have about accountants?
Biggest misunderstanding that people have is they think that accountants report on history. They're just some number crunchers sitting behind their desks and reporting what has already happened to the tax office. That is not the case, at least not anymore. And from last 6 years, the kind of environments I have been, the kind of work I have done, even when I was in a job, the kind of experience that I have gained, I've seen that was never a case. Even a lot of professionals in our industry would say that accountants report on history. I have never seen that happening actually. I have always seen, or maybe I have been fortunate enough to be working with proactive accountants, or be with the people in the industry who are proactive. But accountants have always been helping people plan. They have been using the history numbers to project what is coming in future and give their clients a heads up on what to expect next. What tax bill can come your way, what situation can come your way, what cash flow constraints can come your way. All of this is done by an accountant. But people just think they're reporting numbers from what has already happened. And a lot of even professionals, I'm surprised. It just baffles me actually when professionals come and say, oh, I am, different because regular accountants just report on history. No, since when regular accountants are just reporting on history? Like they've been doing cash flow statements, they've been doing budgets, they've been doing daily things. For a good accountant, this feels like very strange to hear. And I would be like, I'm pretty sure from perspective of all the accountants that I've worked with as well previously, they are surprised as much. Like, who are these people who are saying that advisory is the new thing and we are specifically a advisory led thing, when compliance is that very important? You cannot be advising a client without knowing their numbers in the history, without knowing what patterns they are on, without knowing what their trajectory has been, without knowing how things have turned out for them in their industry. So all this historical data is what helps you making advisory decisions, and that is what accountants have mastered already. So they are the best person in the position to give you that advice on your cash flow, on your budgeting, on your forward planning, on your tax planning, and on the trajectory that you're in. So anything related to numbers, even in the history or in forward planning, I think a good accountant is your go-to person.
Right. But what's a common thing you have seen across your clients when they have asked you to do something that is actually not part of a job of your, as an accountant?
A lot of people come and ask me, Mansi, I have this much money sitting in my bank account. Where should I put this?
Right.
Where should I invest this? What should I buy with this? That's honestly not an accountant's job to do. I'm not a licensed financial planner. So legally, an accountant who's not a licensed financial planner cannot tell you what investments you should be making.
Yeah.
Cannot tell you where you should be investing your money or putting your money in, or cannot tell you that if you put your money here, you would be, expecting this much return on it.
Right.
That's not an accountant's job.
Yeah.
They just can plan for you. They can just create plans. They can set the structures right for you. They can report on your cash flows. They can help you making your decisions by putting those numbers in front of you. They can do that. But yeah, they cannot advise you on where to put your money. And a lot of people expect that advice from their accountant. Especially people, especially our migrant people, people who come from different countries, they don't realize that this job is set for financial planners in Australia. If an accountant is giving that advice to you, he or she probably isn't licensed to.
Makes sense. What's the one thing that every Australian should be tracking throughout the year?
A couple of things. Number one, of course, their work expenses. They should be doing that throughout the year. I see a lot of people just getting to the end of the year and then trying to pull out receipts from last July to see what they spent their money on, or taking their bank statements out and asking, if I don't keep a receipt, can I claim it? If you don't have a receipt, generally you can't claim it. So keep your receipts, track your expenses throughout the year, and just be very well prepared for the tax time. And do that throughout the year.
Like, how much trouble can people get into for not doing it?
Not trouble, but they can miss out on a lot. Because it's human mind. You cannot literally remember every work expense you did, right? You might have bought something from Office Works at the start of the year that you would forget by the end of the year. So it's just better to keep those expenses. Also, one other thing I would like to add is tracking the superannuation fund. Even if you're not having a self-managed super fund, that's not necessary. Even your basic superannuation fund, just keep a track of it. A lot of people get in job with bad employers who cannot meet their obligations, and then they don't get their superannuation paid. So it's better that you check it continuously, keep a track. Just once in a while, check what fees your institutional super fund is deducting. Is it like too high for your risk profile, or are your insurances too high, or is there a nominee on your superannuation account? So with your basic super fund, even if you have $30,000 or $40,000 in your super fund, you should be tracking these things throughout the year.
What's the mistake that most side hustle owners make?
Like, we can call it a mistake. They think they're being smart. They would just skip reporting their side hustle income at all. They would be like, if I'm making 10, 20 grand on side, and it's like, and especially if they're taking cash for it, like, there's no way tax office can know about it. That can be argued in a lot of ways, but I would tell you that if there's a way for you to defraud the system has a way to find it out. There are OSTRAC reportings now these days. There are banks reporting a lot of cash that is getting deposited in your accounts. There is, onus on the person who's taking more than $10,000 cash to report it, to do that reporting from OSTRAC. So this side hustle economy is getting targeted more and more. So even if you're getting away with it right now, you wouldn't get away with it for longer. So it is 100% advised to do the right thing from start. So don't think you are being smart and you're defrauding the system and you're above all this.
Right.
No one is above all this. If they want to come after you, they're going to come after you. So it's better you just stay in your lane and then play by the rules.
Yeah, I mean that absolutely makes sense. I mean, you don't want to, mess up with someone like, big as authority as, the ATO. So makes sense.
Especially as a small guy.
Yeah.
You don't want to get into that lane. You don't have those resources. You don't have that time and energy.
Yeah, yeah.
And especially if your goal is like wealth creation, you're not getting there by, just doing these tiny things on your tax returns. It's not going to work.
Yeah. Mansi, what money issue have you seen create most conflict in relationships?
Secrecy.
Secrecy. Elaborate.
People don't share their financial position with their partners. They just they don't talk about it much. They would be talking about all kinds of things when they're dating, but they wouldn't be talking about their finances. I don't know, there's a notion, I think, in girls that if I ask about his finances, I'll be considered a gold digger. And then a notion in men's brain that, whatever I am doing is, my thing and I should not have to report to anyone, or different kinds of things that people think. I don't know, with whatever reason, people just don't talk about money.
Even, is this after marriage, before marriage, or any time? Doesn't matter.
Especially before marriage, but in a lot of cases after marriage too. A lot of cases after marriage too, people keep their finances separate, which is like a personal decision. Even if you're keeping your finances separate, you cannot expect to live like a couple or live a similar kind of life if both of your goals are different. If you are not aligned financially, even if you keep your money separate, you have to be financially aligned to live like a household. So yeah, that's the biggest, I think, that's a biggest flaw, I think, where
You're
people just where people just realize that they can just do whatever they with their money and it doesn't affect the other person. Whatever you do with your money affects your partner. It does.
So, sounds like different financial goals, or people may have different reasons for
Not
doing
talking,
that.
not having different financial goals, that is something we come at a later stage. It's all about not talking. If you start talking about your financial goals, once you would have that conversation, you wouldn't align. Second time you would have that conversation, you
Yeah.
wouldn't align. After you are humans, right? You have brains. You would come to a midpoint. Slowly and steadily you would start adjusting to others' point of view or others' goals or others' needs, right? But it's just they don't want to talk about it. I think one reason they don't talk about is insecurity as well. They're more insecure about their financial stuff, so they don't talk about it with the person who they have just now recently met. Or if there's a person who are just they're just dating, or they don't see
Yeah.
a long term there,
Yeah,
they
yeah.
wouldn't talk about money.
Yeah, no, makes sense. I mean, why people can have, and I guess it also depends on different cultures that they might be coming from, or I don't know, there might be various other reasons for them to do that.
I don't think there should be secrecy, financial secrecy in a relationship. You should be discussing your credit scores. You should be discussing your financial plans. You should be discussing your money ambitions before getting in, before getting in a marriage or something. Yeah, you should have all that sorted, because a good marriage will not survive the financial secrecy. It will not work if you just refuse to talk to each other about money.
What's a money conversation that every couple should have?
Yep. So they definitely should talk about their financial goals, where they are, what they're expecting, and what kind of lifestyle they want to achieve in their financial goals. Secondly, they should be discussing their credit scores, how collectively or non-collectively, even if whatever they want to do, how it can affect the other person. Because literally, if you are even in a live-in more than 2 years, your borrowing capacity does get affected. So you should be talking about that. And also, you should be talking about your savings, the kind of savings you want to have for the rainy days. You should have that discussion early on so that both of you are aligned.
And what's the biggest financial mistake you have seen young couples make?
Not talking about money.
Not
That's the
talking
biggest.
about money.
Yeah, that's the biggest one, I would say. They just skip talking about money completely, and they're like in living in a la la land, or I don't know what it is.
Yeah,
But
yeah.
you cannot skip that conversation. It is very important. Just do it. If you see as a couple, yes, that's just the one thing they're missing.
Right. Okay. Now we'll do a quick take session. Just say yes or no. Hex, paid off early or not?
Pay off, but before that, pay off your credit card.
Right. And credit cards,
Pay it off as soon as possible. Big no to them. Pay it off.
buy now or pay later?
Never even sign up for an account. Big no.
Salary sacrificing,
Not for me. No.
private health insurance,
Yes, you should have it. Yes.
side hustles,
Definitely recommend it. Everyone should do it, I think.
and university degrees.
For branding and networking, yes. For education, no.
Right. Renting forever,
No.
new car or used car,
Used car.
emergency fund.
Yes, big yes. Everyone should have it. Everyone should have it.
Oh, awesome. Mansi, what's something you have learned about money and life that most people would never believe?
About money and life, one thing I've realized over time is money is just numbers. It is literally just numbers on the screen. All you need is a skill, value addition, and good persuasion skills to convince someone to write those numbers to you. So if you have a skill, you can add value to someone's life and then pursue them to pay you for that skill. You can make any amount of money. So it's all about value addition. Always think to yourself, how can I add more value? How can I increase this person's dependency on me? How can I, make sure that I am a very integral part of his decision making, or whatever he needs in his day-to-day life, even if you're selling a product. So yeah, have a skill, add value, and then have those persuasion skills to get anyone to pay you for that. And that's it. Money is just numbers on the screen.
Wow. Very insightful. And Mansi, we didn't discuss this, but quickly we'll cover this part as well. Can you tell us a bit about your journey, how you ended up being a chartered accountant?
So I moved here after year 12, and I studied my bachelor's in business, majors in accounting. In those 3 years, I learned a lot about accounting and businesses. I also come from a business family. So I had that background, I had that knowledge of businesses, and I had that thinking that if I want to ever do something in life, it's going to be of my own. I was never meant for a job. I was good at what I did, but I always sucked at keeping those jobs because my work ethic was something that wouldn't align. I was very clear, I want to do something of my own. And so in those 3 years, I learned, and then I got a job straight away in the accounting industry so that I can be close to businesses. I can see how small businesses function and what they have to do in Australia's scenario. I learned how small businesses have to comply and what other things they have to do to thrive in Australia's economy. And then I started my chartered accountancy program with Chartered Accountants of Australia and New Zealand. I completed my chartered accountancy program alongside my work experience. And then I moved to boutique firms, working in top 10 AFR firms, learning how it all works, being in those rooms, seeing how the wealthy do it, seeing how it is done at the upper level. Because we are here discussing on YouTube, but you wouldn't ever find a big four partner on YouTube telling you tax loops. Whatever you see on, Instagram or YouTube, it's not how the actual billion-dollar corporations are forming their structures. It's
Right.
not the structures or the vehicles they are using. So I had to be in those rooms. I had to learn that. I had to see behind of it all. And then I went on my own. So
Wow.
that's the journey.
And sorry, this may come across as a probably silly or dumb question, but what's the difference between a CPA, chartered accountant, and an accountant?
Okay, so in Australia, first of all, anyone can call themselves an accountant. You've worked 1 year with someone, you can call yourself an accountant. That word accountant is not legislated, or there's no legislation around that.
Oh, wow.
Anyone
Really?
can call themselves an accountant. So in Australia, you'll find IPA, you will find a CPA, you will find a chartered accountant, and then you can also find someone who is none of these and then is just a tax agent and is still called an accountant. So
So to become an accountant, like people don't need some sort of license or something, like qualification?
not an accountant.
Really? Anyone can become an
An
accountant?
accountant. Anyone can become an accountant. Anyone can work
That's
in the
really-
industry and call themselves accountant. So usually IPA, I think
What's the full form of IPA?
it's Institute of Public Accountants.
Oh, wow. That's a new term for me. I
So
never heard of that.
a lot of firms are IPA and then they get their tax agent license. A lot of firms are CPA, that is their principal partners are CPAs, and then they get their license, the tax agent license, and that's how they perform. So tax agent
Right.
license is the key to be able to lodge other people's tax returns. On top of that, how much qualifications you have is actually not defined. And a lot of people don't check these credentials before going to an accountant. No one asks their accountant, what have you studied, whether you're a chartered accountant or you're a CPA or you are a IPA. That thing is just not too common here. But yeah, then there's CPA, and then there's a body called Chartered Accountants of Australia and New Zealand, through whom I am accredited with. So yeah, it's a rigorous process. You have to go through, you have to sit through exams, you have to, work certain experience, they assess it, and then you have to meet a certain code of conduct to renew your membership every year. You have to meet a certain code of conduct, you have to have certain ethics, you have to keep those ethics in the industry, and then you have to maintain CPD hours, you have to keep your education up to date to maintain that membership with the Chartered Accountants of Australia and New Zealand.
And let's say if we were to talk about the salary range, especially this is for probably students in this industry, like how does it go? Like how much does an accountant usually earns, CPA, chartered accountant, if they're working in a company, and IPA?
So when you start, you would be on a graduate accountant salary, which can range anywhere from 50,000 to 65. Depends where you go, but it generally starts with 50, 55 as a graduate accountant. And as you move across, like you start doing your CA or CPA, that's the accreditation most big companies would ask for. CA and CPA is almost similar in Australia. Though as you begin to progress in your career, you start with your CPA or CA. CA and CPA, there's not a lot of difference as to when employers see you as a candidate. If you're a CA or a CPA, you could just you have equal opportunities, I would say, in Australia specifically. Right. The difference usually comes in accreditation. I think CPA is recognized in 5 or 6 countries and CA is recognized in 20 plus countries. So if you have to be a professional who wants to be globally accredited and move around, you can go for a CA. Otherwise, you can do a CPA. It's practically the same if you talk about Australian employers. They say they see CPA and CA on a same level.
And what about salary range?
So CPA and CA would almost be on a similar salary range. If I talk about public practice, a newly qualified CPA or CA would at least make 80,000 above in public practice. A newly qualified CA or CPA with let's say 3 years of experience, they would be making 80,000 above.
Interesting. And lastly, what about IPA?
IPA, it depends on who's employing you. I'm not looking
Still like
down
a
on
certain
anything.
range, like bracket, like from 100 to 150 or anything like that, or maybe above.
It all depends on preference of employers.
Right.
So I have, in my career, I have not come across an employer who demanded their employees to be an IPA. Everyone demanded their employees to be a CPA or a CA. IPA is an accreditation. Usually people just go and get and start on their own just to have that accreditation. But employers, no one has, whenever I was put an option in front of me in my employment, people either asked me to do CPA or they asked me to do CA. So
okay. No, cool. With that, I think we can end our podcast, Mansi. And it's been a pleasure to have you on the show. And thank you very much.
Thank you, Devan. Thank you.